5 traps your lender won't warn you about. Most first-time homebuyers walk into a lender's office, they get excited about a number on a piece of paper, and then they go make a decision that costs them thousands of dollars. Today I'm going to show you 5 traps that are built right into the mortgage process, and I'm going to show you how to dodge every single one of them. I'm Dave Holland with KeyPath Mortgage, and I've worked with hundreds of first-time homebuyers. What I'm about to share with you is the stuff that lenders don't put on their brochures. This is exactly what I see go wrong at the closing table, and what I wish that every buyer knew before they started. Trap number 1, the pre-approval number. Here's what most people don't understand. The number on your pre-approval letter is not your budget. That's actually the maximum number that a lender will technically loan you based off of your gross income before taxes. So if you make, let's say, $80,000 a year, a lender might approve you for up to $380,000. That sounds exciting, but your take-home pay is probably not $80,000. It's probably closer to $60,000 after taxes, insurance, 401ks. If you buy at the top of that pre-approval number, your mortgage payment could eat 40 or 50% of what actually hits your bank account. So here's my general rule for total housing payment. Mortgage, taxes, insurance, HOAs, they shouldn't be more than 28 to 30%, maybe a little bit more of your net take-home pay, not your salary, what you actually see hit your bank account. Run that number first, then go walk over into the lender. Trap number 2 is obsessing over the interest rate and ignoring everything else. I'm not saying don't look at the interest rate. Yes, your interest rate matters. 0.5% difference on a $300,000 loan over 30 years, it's $90 a month, it could mean real money. You should absolutely compare interest rates from at least 2 or 3 lenders before you commit. But here's where I see people trip up. They go with the lender that quoted them 0.1% lower in interest rate than everybody else, and that lender charges $3,000 in origination fees, moves slowly, and nearly blows up their closing date. When you're comparing lenders, you have to look at the full loan estimate and the whole picture. How fast do they move? Can they close on time? You want to look at the loan estimate. That's the document that every lender is required to give you. It shows you the rate, the fees, the total cost together. The lender with the lowest rate and the highest fees might cost you more than the lender with a slightly higher interest rate and no origination fees. So always ask, what is my total cost to close? That's the number that actually matters. Trap number 3, and this one blindsides nearly every first-time homebuyer that I work with, closing costs versus down payment. Most people spend months and months saving for their down payment, and they forget that closing costs exist. Depending on where you are in the country and when you close your loan during the year, closing costs typically run 2 to 5% of your loan, paid at closing on top of your down payment. On a $300,000 loan, that's $6,000 to $15,000 you need at the closing table. Here's the good news. You have options. You can negotiate for the seller to pay all or some of your closing costs as part of your offer. FHA allows up to 6% in seller concessions. Conventional allows 3 to 6% depending on your down payment. VA, they can even pay some of your debt off for you. You can also ask your lender about rolling some of those closing costs into the loan or about lender credit. But what you need to know are these options exist before you make your offer, not after. Trap number 4, moving money before the close. Trap number 4 is probably one of the most avoidable, and yet I still see it happen constantly. Moving large amounts of money right before the closing is catastrophic to your loan. When your loan is in underwriting, the lender's tracking every single dollar that moves through your bank account. If they see a large deposit that they can't explain, or a large payment even, or you suddenly pay off a big debt, you move money between accounts, you're going to ask for a paper trail. They want to know where that money came from and where it's going. If they can't verify that, they can delay your closing or deny your loan entirely. Here's the rule. From the moment that you go under contract, freeze your finances. Don't buy furniture for your house. Wait until your loan officer tells you that it's all good to go. You don't want to make any large deposits that you can't document, and don't pay off anything in a lump sum without calling your loan officer first. We know what's going on and what's going to be allowable. Tell your lender before you do anything during the financial process. Please. Any good loan officer is going to tell you exactly what's safe and what isn't. Trap 5, not rate shopping. Feels awkward to shop around for a mortgage. The first lender that you talked to was probably friendly, answered all of your questions, and you feel like that you owe them your business. Well, you don't. This is business, and it's a huge purchase. Getting quotes from 2 or 3 lenders, or from a broker like myself that shops up to 100 lenders, is probably one of the most valuable things you can do as a buyer. On a $300,000 loan, a 0.5% difference in rate is nearly 30 grand over the life of your loan. That's a real number. And here's something that most buyers don't know. Multiple mortgage inquiries within a 30-day to 45-day period just count as one single inquiry on your credit report. The credit bureaus built that window specifically for you to shop, and it's a law that's in place so that you can use it. Call 2 or 3 more lenders, call a mortgage broker that can shop more than one lender, tell them exactly what your scenario is, and ask them for a quote. The 5 minutes it takes could save you thousands. So those are the 5 traps that every single one is avoidable. You know what to look for before you start the process. That's exactly why I make these videos. If you're a first-time buyer and you want to sit down with somebody that's going to walk you through the whole process and look at your specific situation for you, I do free mortgage calls. No sales pitch, no answers. If you want to use somebody else, awesome. Just straight answers. The link is in the description. You can set up a Calendly. Thanks.